Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. Today's my birthday week. My birthday's on Saturday. Wow. It's Monday. It's October 24th. We're just getting started. It's about 8:09 in the morning. The market's going to open up in an hour and 29 minutes. And by the way, if you haven't commented below my video in YouTube, please do. Go to the WealthPress channel and comment below that video. I really appreciate it, and I'll respond there. Now let's get into today's analysis. As you can see here, the Dow is up 241 points. The Nasdaq is up pretty good, and the S&P, as usual, is meeting us in between, and the VIX is down. Now, speaking of the VIX, I wanted to show you here that volatility levels are, in fact, cooling off, and I'm hoping that they're going to come down more. The next level is 28. Still got a lot of downside to go, and if the earnings on the FANG stocks, which I'll talk about in depth, are pretty good, we may see that. Put-to-call ratio is still above 90. It's still in that area. It's still telling us that there's a huge amount of put buyers in comparison to call buyers, which is significant because it's telling us the market has a lot of firepower. Matter of fact, as I showed you guys, if you look at bar charts, and I haven't even planned to show you this, but if you look at my 20-day breakouts, you'll see we got 195 stocks breaking out, 38 stocks breaking down. Till this number gets into the 4, 5, 600s, it's not that significant. It's more of a chop. But it is something to pay attention to, the fact that market is starting to move higher, and this number is significantly higher than the number of stocks making 20-day breakdowns. Now, in terms of the economic agenda this week, we've got a big agenda. We've got the PMI, which I'll talk about in a minute. You've got the home price index. Consumer confidence comes out tomorrow, which is really good because we've got earnings, so we can use all the consumer confidence data from the Fed we can get. Then you've got international trades and services, but the big report is going to be the GDP. The GDP will tell us if we are, in fact, growing or not. And then we've got personal income and durable goods. But the GDP will overshadow everything. Consensus is 2.3% growth, which would be nice. Prior, we had negative 0.6%. Anything at 2.3% or above would be welcome. Personal expenditures, I want to see this number really hot. Notice GDP is expected to go up, but personal consumption expenditures are expected to go down. That's the biggest fear that we have, because if they go down to a certain point, well, what are we going to be left with? And then the Fed will be put in a position where they'll have to make decisions because to get us out of trouble instead of getting us into trouble. It's a big difference. So I'm hoping that this will be above 1% and that this will be above 2%. Anything above 2% is good, but I'd like to see the GDP start rocking and rolling again. But it is going to be a tumultuous week for the market because you got the big five reporting, the big five FANG stocks, and earnings. Also, the bond market, this is the most it's been overdone in a long time. I mean, since right here. So I'm expecting at least a rally to the 100 level on the TLT. Just a little bounce. Now, the bounce could take 4 or 5 days. It could probably be a bounce that lasts a week, but I think it'll give the U.S. stocks enough firepower to start moving a little bit higher. I think we definitely need to see that. Now, let me talk to you guys about earnings, all right? So, and I wrote this down, and I'll talk about this more in my VIP room today, but as of Friday, you've got 99 out of 500 members already reporting. That's 23%. So about a quarter, or about a quarter done. This week, we've got 160 stocks reporting, including the big five. Now, for the 99 that have already reported, earnings are down 4% on 7.3% higher revenue. 76% have beaten EPS and 64% have beaten revenue. Not because the numbers are good, because they've been beaten down so much. We're expecting 11.7% decline and 9.2% higher revenue from the 5 FANG stocks that are reporting this week. Now, beyond the 5 tech players, total for the technology, we're looking at negative 14% on 1.8% higher revenue. So you could see the 5 tech stocks are, in fact, expected to do better than the overall tech sector. You may want to write this down. This is very important, and it's baked into the market. Now, in terms of stocks that are coming out today, here are all you got Discovery, Credit Services, you got Logitech, and here are the EPS estimates. Here's all the numbers. Now, tomorrow things get really good when we have earnings on Google reporting. and they're expecting $1.26 per share, down 10% year over year. But revenue's higher, which means people are spending more. Other companies that are reporting tomorrow, you got 3M, you got ADM, you got BIIB, you got Cleveland Cliffs, you got Chipotle, you've got Coca-Cola, you've got General Electric, you've got Halliburton, you've got a lot of stocks. Microsoft, 231 right here. It's a big one. Big, 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 big. Spotify, Texas Instruments, Visa, Winham, Xerox. I mean, it's a crazy, crazy, crazy week for earnings. And that's Tuesday. So tomorrow you've got, today you've got D stocks, Discovery, Logitech, Range Resources, and then tomorrow we start out with Google. And as the week progresses, I'll give you more. But again, tomorrow the big ones are going to be 3M, Microsoft, Google, and a hell of a lot of others like Coca-Cola, Corning. I mean, there's Halliburton, General Motors, Microsoft. But again, Microsoft, and as far as FANG stocks, Microsoft and Google are up next. And I'll go over those numbers later today if you're in pre-market, if you're in my VIP program. Now, volatility levels are still declining, and I'm expecting the FANG stocks to be better. I'm expecting volatility to fall below the 29 level on the VIX, which would be very, very pertinent. Now, let's talk a little bit about market analysis, what happened overnight, and what we can expect today. So 3 major benchmark closed sharply higher on Friday, posting their biggest weekly gain since June. Again, this could be just a bear market rally, so don't get your hopes up just yet. We need to break some major levels, and I'll show you what those levels are in a few minutes. Basic materials, metals did really good last week. Consumer services, oil and gas killed it. So U.S. stocks rallied on Friday after a report that said the Federal Reserve will likely debate a smaller interest rate hike in December. Well, that's probably already priced in because in November, there's a 95.3% chance that a 0.75% rate hike is going to take place, which is huge, huge, huge. And this week, you're going to get earnings on Apple, Google, FANG, and Microsoft. The only thing that's not here is Netflix because that already came out, and we already know how those numbers were looking last week. They're not, I mean, they tried to make a piece of crap look like a candy, but we're going to focus on revenue, not subscriber growth. Folks, subscribers is what gives you your revenue. If you have less subscribers, you're going to have less revenue. And I think those commercial things that they have now where you can downgrade with commercials, I think that's what loyal members are going to be doing just to save some money because people, I still want Netflix, but I watch it maybe 10% of the time now. I'm watching HBO Max, Paramount Plus, Hulu, all these other platforms. Netflix is not being watched all that much. And I'm sure if I'm doing that, a lot of people are too. Just a comment. U.S. services PMI preliminary data is coming out today. Economists are expecting 49.2. That's coming out early in the morning, right here, 9:45, in about an hour and 25 minutes to be almost exact with you. China today closed sharply lower. Didn't impact the market. Remember a month ago how Europe and China were impacting U.S. stocks in the morning? It's not happening. They're being brushed off now. Maybe because of earnings, maybe because we're starting to get ahead of this a little bit. But Chinese delayed GDP data show that the second largest economy grew 3.9%, higher than 3.4%. The Chinese industrial production reported 6.3% versus 4.5%. That's pretty bullish. Now, at the same time, the Nikkei closed higher today, driven by precision instruments, mining, and electrical machinery sectors. Pretty boring sectors. All right, so you have the agenda. Now let's look at levels. Now looking at the Dow Jones, which is up about 200 something after being up 700 something, it's moving higher. The next level, folks, is 32,500. We're at 31,000 right now, almost at 32,000. The next level is 32,500 on the SPY, and I'm so glad we're back in that range, even though bonds are not. In the SPY, the next level is 390 or 3,900 if you're looking at the S&P. And on the QQQ, the next level up is going to be 295. Very, very important level and a level that you guys need to watch out very, very carefully for. In terms of sectors, and we can see a lot more upside in this market. We're not done yet. We only have 200 something stocks making 20-day highs. So you got energy, healthcare, industrial. I told you guys on Friday that industrial stocks are starting to rally. Non-precious metal. Tubing, industrial stocks are starting to come out, and the numbers on the steel companies are very, very good. Some of the stocks you may want to watch out are STLD, that's STLD, ticker CMC, and ticker NUE, that's NUE, CMC, and STLD. They're looking good. Energy again, healthcare, industrial. Consumer staples is down, but consumer staples should start coming back up again. Now, on the bottom side, you got utilities, communication services, and real estate. Consumer discretionary and technology are still holding up, but they're next to consumer staples, which is telling me that these sectors are still out of whack. Now, my suggestion to you when you're looking at the S&P 500, look at this. You got Schlumberger, NOV, Conoco, Unum. Not that many stocks. Mostly energy stocks are still breaking out. Focus on those stocks, folks. Focus on those stocks. In terms of non-energy stocks that are coming up here, you've got Netflix starting to come up. You've got Genuine Car Parts. I'm not a fan of Netflix, but it's starting to come up. Global Life is starting to come up. Nucor, that metal company I just told you about. Northrop Grumman. But as you can see here, it's very defensive. I think the only non-defensive stocks here are Netflix and I think Netflix. I think in Twitter. I saw Twitter somewhere up here. Let's take a look. Do I see Twitter up here, or am I losing my mind? Yeah, there it is. Twitter and Netflix are the only non-speculative stocks. So, are the only speculative stocks. These are mostly energy and healthcare and resource stocks. Very, very important. And I think those are going to continue moving higher. I think this week is going to start out bullish because we're really oversold and the market is starting to shrug off European data. Earnings are probably going to be better than expected because, look at this, 76% are beating EPS because they've been beaten down so much. So remember, these numbers take into account all the recent sideways action. And also remember something else. The small caps that started this downside almost a year earlier have bottomed out 616 and have not seen lower prices. This is the same index. That pretty much, if you ignore this right here, which it got happy when Biden was getting elected because they thought that Biden was going to be soft on China, this is when it peaked. It's almost a year before the rest of the market. And look at where it bottomed out. It didn't bottom here. It bottomed here, which was 616. So if this is the bottom, and this has been the bottom for the last 4 months, the market is going to start assimilating higher prices. So keep your eye on the small caps because they are the biggest and the most speculative stocks that will tell us when we're getting out of this mess. And Kathy Wood stocks too. Let's take a look here. See that? Remember what I told you when we were getting around May, June, that this was the bottom? We went a little low. I don't even want to count this. 33, and this was 34. We're right around there, like a point lower. But the bottom line is this isn't following the bond market anymore. Look at the bond market, right? Look at this. And look at small caps. They're starting to diverge. Very, very important, and something that happens when markets start getting bullish again. Remember, small caps started us here, and they'll get us out of here first too. Now, folks, I've got something important for you. I've been working on something that could literally be the most impactful discovery in the history of Wealth Press. It's an entirely new way to trade and enter and exit the market. I call it the quantum indicator, and I think it has the potential to anticipate the direction of a stock and ETF a full day in advance. Not always, of course. Don't get take it easy, but often enough to give us a major, major edge. Now, I'm revealing the details of a new indicator during a special live training event, 1 p.m. Eastern Time on Wednesday, October 26th, just a few days before my birthday. I'll even share how to install and use the quantum indicator. And the best part, it doesn't cost a thing to attend. Follow the link below. This is a world premiere quantum indicator. I've never done this before. I've never ever launched an indicator in my life. This is going to be very, very cool. Now, I wanted to call it the Super Master Disaster Blaster Indicator, but they wouldn't let me. So we're calling it the quantum indicator. Anyway, just having some fun with you guys. Follow the link below, and I'll talk to you guys later. Remember, comments, email, post comments below this video in the YouTube channel. I'll respond for everybody's benefit. Bye, guys. Have a great, great week ahead. It's going to be one of those crazy weeks, FANG earnings. Tune in every day here, and I'll give you a full update. Bye, guys. Take care. Have a great day.